Good morning, everybody. Happy Monday. It's March 3rd, 2025, first trading day of March. Coming up today, my name is Bob Lang, and it's great to be with all of you today. My company is obviously explosiveoptions.net. Great to have all of you with us, sharing in the daily bites is where we talk about the markets, talk about the Fed, and talk about the economy, trading, and so forth. Anything that can kind of give us an edge in the coming days and weeks in front of us. So here we are, first day of March, coming off of a somewhat erratic month of February. We did finish quite strong on Friday. Came in and saved the day for the past the last hour and a half. Markets did finish strong, almost up 2% across the board, but volume wasn't terrific. And again, it was the end of the month, so we did see a lot of what we call window dressing, painting the tape for the end of the month, and then also some buyers coming in ahead of the month. And we have a lot of stuff going on this week, so let's get to it. So first and foremost, earnings coming out. We have quite a slate of earnings this week. It's not as big as it was the last month and a half. So we're into phase 4 of earnings season right now, which means that quite a few big important earnings are going to be coming out this month, but not very many in total. So what do we have coming up this week? We have Marvell coming out, Marvell Technology coming out Wednesday after the close. We have Costco and Broadcom both coming out after the close on Thursday, along with Samsara. IoT is the symbol on that one. I recently did a chart on it. CrowdStrike and Credo coming out Tuesday afternoon after the close. Best Buy and Target, a couple of big retailers coming out before the market opens tomorrow on Tuesday. And then later on today, we'll hear from technology upstarts GitLab and Okta, and later in the week, Nordstrom's and Ross Stores. So it's a big week for retail sales stores. So we did get some negative readings recently on retail. We saw spending numbers down for the month of February and January on Friday. We also saw retail sales numbers the prior week were down significantly as well too. So that may affect some of the numbers that we see later on this week. As it relates to interest rate policy, pay attention to interest rates right now. Interest rates are on the rise this morning, and as they rise up, we will see it have a negative effect against stocks, especially small cap stocks. So we, how do I know that how do we know rates are moving up? Well, let's take a look at the TLT right here, and you can see the TLT is down. Almost a buck, down almost 1% here, which means when the TLT is down, it means interest rates are excuse me, on the rise. So we do have a little bit of a rally coming up this morning on equities, trying to follow through on Friday's large gains. We see SP 500 is up about 18 points. It was up quite a bit earlier, so it's lost about half of its gains from about a couple of hours ago. Nasdaq up 119, pretty healthy gains over there. Dow Industrials up about 80 points. Nasdaq did hit some support levels last week and bounced off of them very nicely on Friday. So let's take a look at a couple of charts here with me. So I want to show you, I'm going to show you this chart later, but first of all, I want to show you the SP 500 chart, the daily chart. And we can see that on Thursday, the S&P slipped below the 100-day moving average, which is the gold line over here, which has been an area of good congestion, right? And we can see that congestion on the chart here. We can see that, let's box that up here. We can see it between this, listen, I'm just talking about a zone here where this S&P, where this 100-day moving average is. And we can see that the market kind of either flutters here or it breaks out over here in this zone. We can see a lot of activity within this S&P 500. Let's call it 58.95 through the 6,000 level. So a good 105-point range here. that we do see a lot of activity. So it's important to understand where a lot of the action is taking place. And you can see that that's the case over here. We see a lot of action, a lot of volatility here, a lot of movement up or down. We see the big bars here, big bar here, big bar here last week. So that's important to identify zones where we feel that it's safer or not safe to enter positions and to get involved. So for me, right, I would say above there is safe to start playing and getting long. Below here is a time to start lightening up, adding protection, looking for short plays, looking for put plays on stocks, right? Now, of course, you got some support down over here. You got some resistance up there. Those are wider zones. Let's box that up as well too. But for the time being, above there, confirmed, of course, would be ideal for us to start looking for some call plays. It means that the market is starting to improve. The bulls are starting to come back, and we're seeing that reflected in a good price action. Now, again, if we come down over here and we lose this rally from Friday, that's no good, and we're going to probably come back down and test this 200-day moving average, which is a good 175, 177 points lower than where we closed on Friday. It's about 57.21 right now. All right, I want to show you the monthly chart. Of course, we always take a look at this monthly chart. All we do is we just use the monthly S&P 500 chart and look at the MACD and determine, are we in a bull market? Are we in a bear market, right? And when the black line, which is the thick one, is above the red line, we are in a bull market. However, I will qualify that by saying here that it appears that the black line is starting to roll over. It means the momentum that is seen from the MACD is starting to wane. It's starting to drain on the S&P 500, and we're starting to roll over. Now, it would take a couple of months or a really massive nosedive in March and or April to see this black line crossing the red line. Now, even if it does cross it, we need to see a confirmation, which means another month. So at the minimum, if you were looking for the markets to go into a bear market territory on price action, it's going to be at least 3 months, maybe 4 months. So we're talking March, April, May, June. We wouldn't have that signal to start selling the markets until June. And by then, a lot of damage would probably already have been done to the market. Doesn't mean we can't put short positions on. It just means that we'd have to wait our turn until we see an opportunity. So for instance, if the market does shift from bullish to bearish, right, what we would do is we would wait for rallies to start shorting the rallies and selling puts, or selling calls and buying puts accordingly. So we're not there yet. Obviously, this is just simply a pullback. But one thing that to note here is February finished with a doji here, and this a doji by definition is indecision. It means there's indecision by the bulls, there's indecision by the bears. They don't know whether to go up, they don't know whether to go down. So we end up right in the middle of the range for the month. So that tells us a lot of information, doesn't it? It tells us that if you're bullish, you can only go up so far. If you're bearish, you're only going to go down so far, and we're trapped in the range. So if we get a breakout in one direction or the other, whether it's to the upside or the downside, we're going to have even more information to help us understand what direction the market is going into, where the momentum is at. All right. And this one last chart I want to show you is the VIX here, and you can see that the VIX has been on the rise here. Once the 20-day moving average, this is one thing I've heard from Larry McMillan, good friend of mine. Larry says once the 20-day moving average is above the 200-day moving average, that's bullish for volatility, it's bearish for market. So the 20-day moving average we see is at 1702. The 200-day moving average is at 1646. So it's already in. It's already crossed over last week. So that is bearish for markets. Now, does it necessarily mean that the markets are going to tank and tumble on that? No, of course not. These are just indications. These aren't signals to make moves. They're simply understanding what the conditions are like at a certain point in time, so you can move accordingly if the market moves in that direction, right? If the market starts to move bearish, you say to yourself, well, I understand it. I get it, because the VIX is in bearish mode over here. I can go ahead and start putting some bearish positions on myself. So that's making higher lows and higher highs on this indicator as well. Let's show you that. Okay, see that? So it's kind of trading in a range over here, slightly higher lows and some slightly higher highs as well too. So, if it gets into the far into the 20s over here, we are currently at 1968, up a little bit over here. We get into the 20s over here, it wouldn't be far-fetched to see us making a run towards those December volatility highs, about 28, and that would be really nasty for the markets. Now, tomorrow, what do we have tomorrow? We have State of the Union address coming in tomorrow. So a lot of uncertainty coming in with that as well. We have some rather important economic data coming in. Let's take a look at that this week. We have the Fed Beige Book coming out on Wednesday, the ADP employment, and we have a lot of jobs data coming out later on this week, including the JOLTS tomorrow. We have the jobless claims on Thursday, and then of course the non-farm payroll for February is coming out before the market opens on Friday. So we do have a slew of Fed speakers as well too. We don't have a Fed meeting for another couple of more weeks, but they're coming out in droves this week. Mickey Bowman, John Williams coming out, New York Fed, Adriana Kugler coming out. Jerome Powell is going to be speaking on Friday as well too, along with Waller and Bostic on Thursday, and a couple of Fed presidents speaking tomorrow as well too. So pay attention to what's going on around you. Pay attention to what's being said, right? And pay attention to the data. We do have a lot of stuff relating to manufacturing this week. PMIs. Final PMIs coming out this morning, and then also on Wednesday morning, ISM services Wednesday, along with factory orders. So all of these taken in total here are going to give us a much better glimpse of where we are in the quarter. Now, I don't know if any of you noticed GDPNow, which is a estimated model for GDP, and they usually talk about the current quarter. They came out and said that it looks like we're going to print a negative quarter in first quarter here right now. So we went from a plus 2.3, we're now down to a minus 1.5, and that's mostly driven by trade. Imports came in really, really heavy as there was a worry about tariffs coming in. So there was a lot of ordering, a lot of aggressive ordering that came in the first part of the year. So that drove down a lot of exports, but drove up the imports, and we have that trade balance going on. Largest in history on an annual basis, $1.6 trillion, $1.8 trillion deficit on an annualized basis. So that's no good. We're going in the wrong direction over there. But we'll see what happens, and we'll see if this number bounces back. If we do have a good, strong jobs number on Friday, and weaker inflation coming out next week. We do have the CPI and the PPI coming out next week. This is for February reading. We do have all that combined together. It's possible that this number is going to change and move right back up again. But as of right now, a negative quarter over here being estimated for a print in Q1. And of course, that could always bounce back in Q2 if the import number flips and we can see a strong GDP number to offset that. I mean, it could be 4.5%. That would offset a negative and give us an average reading of about 3%, which wouldn't be so bad. All right, that's going to be it, everyone. I appreciate everyone spending a little bit of time with me today. Great market day here. The weather is starting to get a lot better in New England. And we do have, don't forget, we do have the time change coming up this weekend. I will not have the daily bites on Thursday this week. I will be out. I'll be in New York City for the day. But it's more likely I will have daily bites coming at you. Maybe I'll do it on Wednesday. That's possible. Maybe Wednesday morning I'll do it and surprise everybody, just so we can have two for the week. But Thursday I'm going to be out, and not going to be able to do that for you. So I mean, I appreciate everyone again spending a little bit of time with me today. If you know somebody who needs this, please send it out. Please retweet this and send this out. If you're not on our YouTube channel, go ahead and check that out. Not only do you get the daily bites, but you'll also get the chart of the week, which is going to be coming on Wednesday as well too. So have a great trading day. If you're in the chat room, I will see you there a little bit later on today as well. And let's make it a great day of trading. Make some money today, learn a little bit, and I'll see you guys in a couple of days. Take care, everyone. Bye.